when we talk about, people waiting for, rates to come down or whatever the case is, it's going to remain tight. And if rates go from 6.5 to 5 or whatever the case may be, the demand is just going to increase.
Hey there, welcome to Mortgage Minute. So if you're new to this show or if you've been with us the whole time, you should know this is not a show about interest rates. Now, our focus is helping potential homebuyers understand the mortgage world as it pertains to buying a home. It's quite simple. Therefore, we focus on data over drama, facts over feelings, if you will. Our goal is to provide education about the home buying process from a real estate and mortgage loan perspective, while providing you with the truth about these markets. And so who are we to offer such advice? Well, my name is Matt Thomas. I'm a local realtor and have been for over 13 years. My co-host is Brian Daywald, a highly acclaimed local mortgage lender in his 20th year. Both of us serve the Denver metro and surrounding areas. So today we're going to be looking over a few real-time topics that are most poignant for home buying in today's market. And if you or your family are looking to purchase a home, quite simply, this is where we believe you should be getting your information and not scrolling through the internet. Now, today we're covering a little bit of new territory. The markets have been reacting to the largely positive news about inflation, but not necessarily in the way you'd expect. For whatever reason, we're seeing sort of an opposite reaction to positive inflation data. Brian, what's going on?
I can tell you what's going on, but I can't necessarily tell you the why, right? We're calling this one a head scratcher. So here we are. This is June 19th, 2023. And last week was some pretty important data that we were looking forward to in a good way. CPI came out last Monday, and PPI came out on Tuesday, the following day, which is the wholesale version of that. And, traditionally speaking, when we see improved reports on both, either or both, particularly CPI, that's good news for mortgage rates. So
sure.
Last week was really goofy, right? Both the CPI and the PPI came in, it's the word I'm looking for, at a better level than expectations, which usually takes us off the chart in terms of pricing, right? That means the market gets better quite a bit. But
the whole industry always talks about how, mortgage rates follow inflation. So if they're headed down, that should be positive news.
99 times out of 100 it is. This is the first time I can recall seeing where we get this good of a report that we're looking forward to, and it goes the wrong direction. We were off by almost 60 basis points at the end of Monday last week, which means from the time we opened the market to the time we closed, it was a 0.6% difference in price. That's a big difference in a day, particularly when we get good news, right?
Yeah.
So it's just, we're trying to kind of wrap our heads around why that happened. We still don't know, right? It's just the way markets were reacting. The 10-year treasury went up. Like, it's just a goofy time in our industry for sure. And, we can't seem to get a pulse on it. So that's not really awesome news to share when we're scratching our heads trying to figure out what's going on. But nonetheless, like you said, this is about facts and not feelings. And the facts are, the market didn't react well. The rest of the week was pretty good last week and or flat. So, the early part of the week was a little bumpy, ended up flattening off and doing okay after that. But anyway, weird moment.
Yeah, here where boots are on the ground. I mean, are you seeing a pullback in either mortgage applications or people buying homes?
It's interesting you bring that up. We had a very busy weekend putting folks under contract to buy houses. And it's
I'm swamped. I mean, that's the same thing here.
Yeah, I mean, it's just, there's just and this is, part of the second thing that we wanted to talk about is just the inventory levels. Folks are there's lots of offers on very few homes at the moment, right? There's way more buyers than there are homes available, at least in most of the price ranges, right? A lot of the,
sure.
The common houses that go under contract are happening quickly. There's obviously a handful that don't go quickly, that are just price or location or whatever the case is. But the majority of folks that are out there looking at the moment are competing with other buyers for sure.
Yeah. Well, and I'm still seeing the best properties. Best properties will go on and off the market in any market. Yep. I've seen, just 2008, 2009, when there was a ton of inventory, the best homes would still sell quickly. Right now, we have the opposite of that, very little inventory. But the homes that are sort of ready to go for a buyer because of the interest rates, and they might be putting more into purchasing the house than they would have before when interest rates were so low. and not have quite as much to put into fixing a house. So there's still an emphasis on, those homes that are going the quickest are certainly still the ones that are most prepared for market. But yeah, I'm seeing exactly the same thing. We're seeing a lot of inventory starting to come onto the market, but it is disappearing quickly. So we're in a very tight inventory scenario still right now. And I would say also, it is mid-June, late June. Oftentimes the market has started to cool from the spring just a little bit by now. And it seems like to me like it's still charging pretty hard.
Agree. Yep.
Yeah.
Agree. Yeah, and to kind of add to that a little bit, just to talking about some of the inventory levels, there's a lot of folks out there that still thinks it's a bad time to buy, right? Or that there's going to be a crash. So I wanted to kind of speak to that a little bit. When you just mentioned 2008 and 2009, the major difference between then and now, there's two main differences. And the first one is just the inventory. Back in 2008, there were close to over 9 million homes listed. I'm talking nationwide, of course.
Nationwide, yeah.
Yep. And right now, last stat that I saw was the end of May, there was 968,000 homes. So a substantial difference. And one thing that half of those homes all have in common is that they were already under contract, right? So we're talking a tenth of the inventory available, and then half of them are under contract. The other thing that's super interesting is that when we look at population data, the average home buyer forever is 33 years old. Right now, there are way more 33-year-olds than ever before. And back in 2008 and into 2009, it was at a record low. So tons of inventory, very few buyers out there. We talk about Econ 101 as just supply and demand. So tons of supply back then, not very much demand. Right now, it's the polar opposite of that. And data suggests that we're going to continue to see that for 10 years or so. So when we talk about, people waiting for, rates to come down or whatever the case is, it's going to remain tight. And if rates go from 6.5 to 5 or whatever the case may be, the demand is just going to increase. So, those are the conversations we're having with buyers right now is, let's get in while you can, because prices don't seem to be coming down at all.
I think I was born, I know I was born in the mid 70s, and I had just recently learned that there were few of us born then than ever before.
Yeah,
I was exactly in my low 30s when right at that particular junction. So I did not know that, but yeah, that makes sense. I've heard certainly that the millennial buyers are out there in full force, and there are quite a few more than there ever have been. So very interesting dynamics that continue to play in our markets, and that's exactly why, again, Brian and I are here to kind of to dispel myths and rumors about what we think is going on in the market. We're not about what we think or what we feel. We're about what are the data telling us and what are the facts telling us. The news and the fear mongering that's going on as you scroll through your phones and wherever you get your news sources is just that. It's just fear mongering. So, and Brian, as always, we're going to leave your information for how people can get in touch with you. If you have mortgage questions, for myself, if you have real estate questions, and together we can absolutely help you navigate this, June, July, August, this summer of 2023 to get you through to help you buy a home.
I've got some stuff we'll work on for the next meeting, and always good to see you.
Sounds great. Yeah, you as well. Thanks for your time, and we'll see all of you next time.
Look forward to it.